I'm not going to make this intro lengthy and boring for you. I'm heading straight to the point, but I think I shouldn't have said the first 2 sentences so the intro would be much shorter. I believe I'm making it even longer by analyzing my intro. Let's start all over again. In this video, I'm going to show you how to effectively trade breakouts by just using trend lines. Even a 2-year-old can understand this strategy, so expect this to be the easiest strategy you've ever had in your life. Join me in this video and let's make some money. This strategy comes down to 3 things: a trend line, a breakout, and an entry. If you're able to draw a trend line, identify when the breakout happens, and know exactly when and where to enter the market after the breakout, then you're a master of this strategy. Let's start with drawing a trend line. A trend line represents a line drawn between 2 or more price points on a chart. This line is used to identify the direction of price movement. Think of it as a diagonal equivalent of horizontal support and resistance. We'll make use of just the uptrend and the downtrend in this strategy. To create an uptrend, you need to draw a line to connect at least 2 or more significant swing lows. A swing high or low is created after a significant drive away from a price point. It's either a massive pull from a price point or a gradual but prolonged move away from a price point. For a downtrend, you will need to connect at least 2 or more swing highs and extend the line for future touches. If you're finding it a bit difficult to fully grasp the trend lines concept, this video at the top right corner should help you out. Now, let's move to the breakouts. The breakout is when price breaks out of the trend line, but not every breakout will count as a valid breakout for this strategy. A valid breakout is when there's a reaction to the third or further touch of the trend line before the actual breakout. In simple terms, when price touches our trend line for the third or subsequent times, it should show a sign of rejection by pulling back right after touching it before the breakout happens. Then the current breakout will be valid. An invalid breakout is when price just breaks through our trend line on the third or subsequent touches without any rejection. After a valid breakout, you need to make sure that the breakout surpasses the high or low of the rejection point. This is an example if you find my statement confusing. After confirming the breakout has surpassed the rejections high or low, we then make an entry. The entry is made at the close of the candlestick that confirms the breakout. Then the stop loss and the target profits are set. The stop loss should be placed a little above the previous high after the breakout in the case of a downtrend, or a little below the previous low after the breakout in the case of an uptrend. The target profits is just 2 times the risks as usual. Take note of this: if the breakout for entry occurs during the Sydney or Tokyo session, don't enter the trade. So now that we know how to draw a trend line, how to identify a valid breakout, and when and where to enter the trade, let's head to some real examples with a forex chart so you know how to apply this strategy in the actual market. But before that, I recommend you use a 1-hour time frame as a starting point with GBP pairs like GBPUSD when you start trying out this strategy. Let's move to the real examples. In example 1, the market starts to trend up from a price point and creates 2 solid swing lows that we can connect to create our trend line. We start the trend line from where price started to trend upwards and connect it to the second swing low before we extend it for further touches. On the third touch, price bounced off the trend line again, but this time around, instead of continuing the trend, it turned back around and broke through our trend line and closed below the previous low, which is our rejection point. This is the part where we make our entry. We enter at the close of the candlestick that broke the trend line and the previous low and set our stop loss above the previous high and our target profit of 2 times the risks we set. In example 2, as usual, we wait for price to create 2 significant swing highs or lows depending on the trend. In this case, price is moving downwards, so we look for swing highs. After some hours, we see that we can connect 2 significant swing highs if we start our trend line from the start of the downtrend and stretch it all the way down to connect with the swing high that occurred below it, making our trend line. We then stretch it for further touches and see what price will do. The market produces a third touch and shows a rejection but turns back and breaks through the trend line and stalls for some hours before breaking through the previous high of the rejection point that was created before the breakout happened. At this point, we make our entry at the candle close and set our stop loss at the nearest previous low and set our target profit of 2 times the risks. I'm pretty sure you're getting familiar with the strategy right now, so let's head to the last 2 examples before you try it out yourself. In this example, we draw our trend line to connect the 2 swing lows that the market has created for us. After drawing our trend line, we wait for what price will do when it gets to the trend line again. Price got to the trend line and showed a sign of rejection. Price stalled at the area for some time and broke the trend line before finally breaking out of the previous low. We make our entry at the candle close and set our stop loss above the previous high and our target profit of 2 times the risks we set. In the last example, price generated early swing highs. We connect our trend line from the first swing high to the second swing high and extend it for further touches. When price got to our trend line again, it showed a sign of rejection before finally breaking out of the trend line and the previous high of the rejection point. We entered the trade at the candle close and set our stop loss below the previous low and our target profit of 2 times the risk. That will do it for this breakout strategy. If you find anything confusing, you can drop it in the comment section and I'll be happy to help. If you enjoyed this video and you would want more easy and smart trading strategies in the future, don't forget to like and subscribe for more. Until then, happy trading and may the pips be in your favor.